All right, I think we'll go ahead and get started with our workshop. This is the Fifth Third Bank Owning It Home Ownership Workshop. And my name is, hello, and I just want to thank you for joining us for the Owning It Home Ownership Workshop. My name is Roy Sutton, and I am the Central Region Community and Economic Development Manager for Fifth Third Bank. Today, we have assembled an informed group of professionals to talk to you about the process to build wealth through home ownership. This session will equip you to begin the process. I do wish, I would have the workshop where I'm sitting there right in front of you, but we're in a virtual environment now. We're going to take an opportunity to share still good quality information with you. So if you're sitting there with a friend or family member, all the better. To share this information with those that are around you. So when I first began my home ownership journey, frankly, I was pretty lost myself. I really didn't have a good clue and probably didn't necessarily take advantage of the type of advice that you're going to receive today. I wish I had, because in the first home that I bought, when we bought the home, it looked good on the inside, but there are a host of other issues. The process didn't necessarily go as smooth. I didn't feel like I was as informed as I need to be. It was a pretty rough process. We made it through. I learned a lot, but that's not the way that I really wanted to learn about home buying, is going by an experience that was pretty tough. So today, we're not here to sell you a product nor a service. Our aim for you is to navigate the home buying process successfully and to equip and empower you and your family to begin the journey toward obtaining your piece of the American dream. Now, before we begin, I'd like to acknowledge our partners who are making this possible. The Greater Cincinnati African American Chamber of Commerce, the Cincinnati Herald, the Dayton Defender, the Dayton Weekly News, Working in Neighborhoods, Priority Plus Realty, the Ohio Realtors Association, the Home Ownership Center of Dayton, Alpha Kappa Alpha, and Kappa Alpha Psi, and we're all here for you. And we've reserved this time at the end of each presentation and the conclusion of our workshop for you to ask questions about the information that you've heard. We welcome your questions because this may be the first time that you've heard any of this information before. So now I'd like to introduce our next presenter, Maria Rutherford Long. She's a Vice President and CED Manager here in Cincinnati. Maria, if you could begin and share what the housekeeping items are for the group here today.
Thanks, Royce. And hi, everybody. This is such a great opportunity for you to get information, no matter where you are in your home buying process or your journey. We just want you to have a great experience today. So I'm going to share with you a few tips that can help you do that. First, take this moment to mute your electronic device, whether it's your laptop or your cell phone or your tablet. This will help eliminate any background noises and disruptions. And oh, by the way, my lawn care service is working on my lawn, so you may hear a lawnmower. And that is exactly the kind of disruption we don't want to have. I apologize. The other thing that we want you to know is to go to a quiet place. It helps to eliminate any disruptions as well. And it also helps you to stay focused on the information that we're going to be sharing with you today. It is an amazing set of experts that you're going to be that's joined us today. Also, take good notes. I know that I can't remember everything, so I take notes. And one of the things that I need to do is sometimes I just take a picture of the screen or I take a screenshot. The second thing is ask questions. There's no silly questions. So questions are welcome. It doesn't matter if you might think it's a silly question, but as Roy shared, we've all been in this place. We had a lot of questions at that time too. And then a few of the questions will be answered in between each portion of the presentation. The expert will be able to answer a few questions, but at the end, we'll answer most of the questions. We'll also have an added addition for you. We're going to give away two $50 gift cards today. So engage in the chat function. You can place your questions there. You can place comments there, but we will be watching the chat for who will be joining us. And we will give away 2 gift cards. I also want you to know that we're on Facebook Live. So, hey, everybody, Facebook Live. And we want to know that we'll be giving 1 card on Facebook Live and 1 on this Zoom call. So, thank you for joining us. We also will be following up with you. We're going to send out 2 emails. The first within this week, this 7-day week, 7-day time period. And then the second within the next 30 days or the next month. This will be just an encouragement to help you along the way on your journey to home ownership. We also want you to know that our mortgage officers will be on the line on Monday at 6 p.m. if you want to take a deeper dive. The deep dive is designed for those who are ready for home ownership and are looking for professionals to get them started on that path. We will provide the link right inside of the chat as well. So sit back and relax, and I'm going to introduce you to our first expert, Ms. Tina Surface, who's the area mortgage manager in Cincinnati, Ohio. Thanks so much for joining us. Take it away, Tina.
Great, thank you, and thanks everyone for joining. If we can turn to the next slide, we'll just kick right off and really talk about some benefits of homeownership. So before I do that, I do want to share a little bit of my background. So I've been in the financial industry for about 30 years, all on the consumer side of the house. So whether it was in the retail, the securities, or mortgage, it really did be around consumers like yourself. So I am very excited to spend a few minutes with you talking about the benefits of homeownership. So if you'll go to the next slide for me, please. All right, great. So let's just initially kick off. You'll see we're going to talk about 5 things, but the first one is really about being your own landlord. So that's fairly self-explanatory, right? You can see the illustration. If you're paying $800 rent as an example today, that's really not helping you from a property standpoint. It's really paying off your landlord's property, right? But depending on the size of your home and your mortgage, you could actually pay equal to or even less than what you're paying in rent, and you can own your own home. So that one is pretty self-explanatory, but some people don't realize that you can actually get a home and pay equal or less than what you're paying today. So that piece is really critical. And then as you're kind of thinking through that, one of the things to also think about is investing in home ownership. So right now, if you look at the most recent census, 64% of people in the United States are homeowners. One of the big reasons that they are homeowners is really illustrated in the slide. So if you think about probably one of the larger purchases that a family will make is for an automobile, right? And whether you're borrowing to do that, whether you have the opportunity to purchase in cash, it doesn't really matter. But once you drive that car off the lot, that value of that car immediately goes down, right? That's depreciation. For a home, it's kind of the opposite. When you buy that home from that day forward, history will tell you the property actually goes up, right? That's appreciation. So when you think about appreciation and the value of your home, that allows for flexibility. And as people are starting the journey of home ownership, it's sometimes a really scary thing to think about. And sometimes people think it is a lifetime decision. And what I would tell you is it absolutely impacts your life, but you're not locked into that home forever, right? A lot of people will start with one home, and that appreciated value that we talked about the property value will go up. As you're paying your mortgage, the equity available will go up, which will allow you to upgrade your home, upgrade your house, purchase a house that's maybe a little bigger, may have more bedrooms, whatever. Maybe you decide you want a different location. All of those things are you're able to do through that appreciation and that property value, and again, the equity that you build. So when you think about the benefits of home ownership, not only are you your own landlord, but you're investing in your home, you're investing in yourself, and you're investing in the opportunity to purchase additional properties as your life may change and your decisions may change. Okay, so if you'll go to the next slide. So as that transitions over, so we talked about the value of being your own landlord. We've talked about the investment, but one of the other things that we want to talk about is reaping potential tax benefits. So before I go into that, I will always caveat that you should always consult a tax advisor, because everyone's financial situation is different. Everyone's tax situation is different. So the things I'm going to be talking about may very well fit in your financial situation, but again, I would ask you to talk to your tax advisor. But many customers and individuals who purchase a home, they reap the tax benefits. And so they can deduct mortgage insurance. They can potentially deduct property tax payments. There's also tax incentives for energy efficient home improvements. So things like once you're in that house, if you purchase new windows, if you have a high efficiency furnace, you upgrade your entry doors, all of those things you can get some tax incentives for. And then home improvement. So beyond some of those energy efficient kind of green items that we talked about, also many people will take out an equity line or an equity loan, utilizing that appreciation value, utilizing that equity that they've built to then take out an equity line or loan. And then even that interest can sometimes be deducted as well. So a huge benefit from a tax perspective when you are a homeowner. And then one of the fun things that I would also talk about is it's your castle, right? You get to customize your castle. So if you're renting right now, or maybe living with someone else right now, I'm sure everybody has great ideas, but you're somewhat limited on what you do with that property. When it's your property, it's yours. It's your castle. You can make the decisions to decorate how you want, paint how you want, whatever you want to do to make it your own. That is awesome. And that is part of the beauty of home ownership. And then last but not least, on the slide you see now, is becoming a part of the fabric of the community. And this one I think is so critical. All the things we've talked about already, with being a landlord and investing and tax benefits and all of that is great. And those are great benefits. But being part of a community is one of the things that I know I value as a homeowner, and I'm sure other people on here would also agree. It is a huge benefit, right? You get to know your neighbors, you get to know the community, you're part of a group. Things that you think about, events, fun activities, all of those things are really the beauty of community. And then I think the most important part is your neighbors, your community becomes an extended family. As you are having those opportunities to celebrate successes and celebrate family situations and big events in your life, inviting those neighbors and communities, all of that is a beauty maybe that you can't really talk about in a short event like this. So super excited on the last piece. And you know, there are many, many more benefits to homeownership. These are just 5 in the short time that I have. But I will tell you that we're here to help. We're here to help you not only learn the benefits of homeownership, but answer any questions you have so that we can help you move down that path. So with that, thank you for allowing me to take 10 minutes of your time, and I will turn it over to Hope Wilson to continue the conversation.
Before we get started, Hope, are there any questions in the chat? John or John Reese or John Razor, any questions yet for Tina?
We have a lot of great positive comments about owning your own castle. Can't wait to have our own place, but I don't see any questions yet in Zoom chat.
Thanks, John. John Reese, any questions in the Facebook chat? Well, having not heard any, Hope, take it away. Thank you so much, Tina.
Thank you.
Great. Good afternoon, everybody. I'm Hope Wilson, and I'm with Working in Neighborhoods, located here in Cincinnati. And today I'm going to talk to you about credit. Credit is an important part of the home buying process. Let me back up and tell you a little bit about Working in Neighborhoods. We're a nonprofit HUD Approved housing counseling agency. Our service area is all of Southwest Ohio, including Butler, Claremont, Hamilton, and Warren counties. We provide one-on-one housing counseling and group education for home buying, as well as financial literacy workshops. Today, I'm going to focus on credit. So what is credit? Credit is money you borrow and plan to repay. There is a charge for borrowing money, interest and fees. Credit allows you to make purchases without having to pay the entire price at once. The money you borrow is used to make a purchase, for example, furniture, a car, or even a home. When you borrow, you agree to repay that creditor and pay a fee for the use of that money. There are several different types of credit: secured, non-secured, revolving accounts. Examples of those are things like credit cards, where the amount you pay and the amount you owe can change every month. Installment accounts are something that has a starting balance and you pay the same amount each month until it's paid off, like a car loan, a furniture loan, or a student loan. Next slide, please. Next slide, please. So the 4 C's of credit. The 4 C's are one tool used to evaluate your credit worthiness. The first one is capital. It's the amount of money you have available, your assets, and your net worth. Capacity is your ability to repay. You have more income than you do expenses. Can you afford to repay this loan? Character is your credit history. How have you paid your bills or debts in the past? Were they paid as agreed? Were they paid on time according to the terms? Collateral is the property or assets offered by you to secure a loan. So in the case of purchasing a home, your home would be the collateral. Next slide, please. When should I use credit? Credit can be useful in emergencies, but keep in mind that using credit is not appropriate in every situation. On the screen are a few questions you should consider before using credit for any purchase of any size. How much do I have to pay to borrow this money? Is this purchase a need or a want? Will the item last longer than the time it takes to pay off the item? How will the payment affect my monthly spending plan? Next slide, please. Although credit can be a useful tool, it can also have some disadvantages. What happens if you overextend yourself and can't repay? The cost of using someone else's money can sometimes be very expensive. Be sure you understand the terms of repayment or you could end up in a bad financial situation. Next slide, please. So let's talk about credit reports. A credit report is a statement that has information about your credit activity and your current credit situation. The report includes your payment history, the types of accounts, the amount of debt that you have, public record items, things like judgments, liens, bankruptcies, and inquiries. Inquiries are who's looked at your credit in the last 12 months. Credit reports are used for many different reasons. They're used by lenders, insurance companies, employers, landlords, utility companies. Things remain on your credit report for different amounts of time. Inquiries are there for 2 years. Public record items remain on your credit report for 7 to 10 years, and old accounts remain on your credit report for 7 years from last activity. Next slide, please. There are 3 major credit reporting agencies: Equifax, TransUnion, and Experian. These agencies get information from your creditors, typically on a monthly basis, and create a report that includes everything in your credit file. Keep in mind that the information on your credit report may vary from one reporting agency to the next. This is because some creditors do not report their information to every credit bureau. Credit reports sometimes contain errors. It's important to correct any credit errors that may occur on your credit report. If negative information on your report is accurate, only the passage of time can assure its removal. You are able to get a free copy of your credit report from each of the credit agencies annually, and you can go to www.annualcreditreport.com and get your free credit report. It's important to check your credit annually. Next slide, please. So let's talk about what makes up your credit score. A credit score is a number that creditors use to determine the likelihood that you will repay the money you borrowed. Your credit score is based on information on your credit report. It is made up of the following. 35% is your payment history, looking at how you've repaid the debt you borrowed. 30% is the amount you owe. 10% is the length of credit. 15% is the length of credit history. How long have you had credit? The longer, the better. 10% is new credit, and 10% is the types of credit used. FICO is the most common scoring model that people have heard of, and it has scores that range from 300 to 850. In this case, the higher, the better. Next slide, please. So let's talk about improving your credit. If you have some credit challenges, things that you can do to improve your credit. Make sure that you pay your bills on time each month, paying them by the due date so that you don't get late fees and that it doesn't report that you're 30, 60, or 90 days late. Reduce the amount of outstanding debt that you have. So not using all of your available credit, keeping your balances low in relationship to your credit limits at 30% or below. You'll sometimes hear that referred to as your utilization rate. Apply for and open new lines only when you need them. It's not important to have tons of credit, but it's important to have good credit and manage it well. Check your credit report for accuracy. As I mentioned before, sometimes there are mistakes on your credit report. Clear up those errors as soon as possible. Another thing is to avoid too many inquiries into your credit report. So not having everyone pull your credit. Those inquiries can hurt your credit score. If you've had problems in the past, reestablishing credit, things you can do, apply for a new credit card. If you're unable to do that, work with a bank partner like Fifth Third Bank and get a secured card where you put money on deposit and then have a credit card that reports to the credit bureaus so you can start to build credit. Use it for something that you were already going to purchase, like your gas or groceries, So we're not encouraging you to go into debt to establish good credit. There are things you can do to create new credit and improve your score over time. Lastly, the important thing to remember is that credit is a privilege, and if used appropriately, you can achieve financial stability and your goal of homeownership. Now I'm going to pass it along to Jackie Easter from the Homeownership Center.
Hope we're not going to let you get away that quickly. We know that there's going to be questions. We've got a ton of questions coming through, but before we get into the questions, I want to remind everyone, we are giving away 2 $50 gift cards today. So stay tuned all the way through. We're not going to give them away now. We're going to wait till the end of the session. So stick with us all the way through. And the other piece, on Monday at 6 o'clock, if we don't get your question fully answered here, we've got a session at 6 o'clock on Monday, and we'll share the link at the end of the session where you can go into specific questions and we can talk about your individual situation in what we're calling a deep dive. That's Monday at 6 p.m. We'd love for you to join us. Even if some of this information, I know we're talking a little fast, a lot of information covered. If you want to rehear some information, you'll get an opportunity to do that. Well, Monday at 6 o'clock. John, it's all on you now. What do we have on the question side?
First question.
So, go ahead.
No, you go ahead, John. We'll get
John
okay,
Reese.
John Reese, you're up.
Okay, what interest rate would I pay to buy a house? Is it high as the interest rate for credit cards?
So the interest rate will depend on your credit score. And no, typically mortgage rates at this time are not as high as credit card rates, but I'll let one of the loan officers reply to that.
Hey, Dan, I'll let you reply to that.
Yeah, this is Dan Beckley with Fifth Third Bank. Interest rates change with the market, and they also do depend on the down payment size that you have for the house. They depend on the program that you're using, whether it be FHA or VA or the Fifth Third Community Mortgage. There's tons of different programs and products, but right now, 30-year fixed rates have been at all-time lows. They're in the upper 2s and lower 3s. So it depends on when we lock in and what the market's doing, but they're much lower than you would see on like a credit card or some sort of unsecured debt. Unsecured debt means that you're signing and they're trusting you. With a secured debt, like an auto loan or a home mortgage, you're going to have collateral. So there's actually a little bit more recourse. And so usually the pricing is a little bit less because the risk is less.
Dan, while we've got you real quick, is there a minimum credit score for applying for a home or getting approved?
Well, when I work with a client, there's no minimum credit score to get started. So if you have credit problems or you've got some issues in the past or things that you need help disputing, working in neighborhoods, the Homeownership Center and myself, we can help guide you through that process in order to improve your credit. Right now, Fifth Third Bank offers an FHA loan at 600 is our minimum score. But that doesn't necessarily mean that that's the only qualification. So if you have a 600 score, you're going to be approved. So there's a lot of different pieces. So it's really important that you discuss all of your options, all of the programs, and what you need to do to prepare yourself to get a home loan.
Great. Hope, and I'm going to kind of summarize some of these questions together. Can a home be purchased if there's a bankruptcy on your record? And really, does WIN assist those needing credit cleanup?
So yes, you can purchase a home after you've had a bankruptcy. Typically, you need to be 3 years from the discharge of that bankruptcy and have reestablished credit. It will depend on the loan and those particular requirements, but it is possible. And yes, working in neighborhoods, we offer one-on-one housing counseling to help you with your individual situation. So we will review your credit, look at your income and expenses, and create an action plan for you to move forward to reach that goal of homeownership.
That's great. And then one more before we get back to the presentation.
I was just going to say, there are some programs that have 2 years out of bankruptcy as well.
Awesome. Thank you, Dan. So what's a good way to monitor your credit? Is Credit Karma a good idea? and then maybe the fastest or best tip you can give someone to improve their credit.
Yeah, so to monitor your score, I encourage folks, like I said, to check your credit report annually. And one of the things, if folks want to see it periodically, pull one credit bureau, and then 3 months later, pull the next one, and then another 3 months, pull the third credit bureau. So you're seeing a snapshot over time throughout the course of the year. Credit Karma, Credit Sesame, all of those are just a tool that gives you some idea of your score and what the changes are, but it really doesn't always match when you go into a lender and they pull your credit and look at your score. It depends on the scoring model that they're using and what's out there at that point in time. So they're helpful, but they are not exact.
All right. Well, thank you all for answering those questions. If we didn't get to your question, or if you have more questions, don't forget about that deep dive on Monday evening. More information will come out about that later. So back to you. It looks like Jackie Easter is up next.
Thanks, Hope. That was a great job. Credit is really critical in the mortgage readiness process. I'd also like to thank Fifth Third for the opportunity today to participate in the webinar. They've been a great partner of ours since the day we opened our doors. I'm Jackie Easter, a homeownership advisor at the Homeownership Center of Greater Dayton. So Hope's a part of our sister organization to the south, and we cover Montgomery County and all the surrounding counties, and especially the counties to the north of Montgomery County. We provide coaching services, just like Hope told us about. We help families that are hoping to purchase a home, from credit concerns to mortgage readiness to mortgage products and down payment assistance. We're here to offer assistance. We meet you where you are in the home buying process and offer guidance and support until you own your own home. Next slide, please. Next slide, please. All right, so we are approved by HUD and have all certified counselors with HUD, as well as National Foundation for Credit Counseling. We have our first-time homebuyer program that we're talking about today. We also do foreclosure prevention work for folks that are struggling with their mortgages. And we have an in-house credit counseling program. I'll talk more about that later on. All right, next slide, please. There are a number of areas that help you determine if you're mortgage ready and how much house you can afford. Your lender will be looking at your income, debt, credit, and savings. Another big decision to make is, how much house can I afford? When calculating what you can afford for a mortgage, the primary focus is on your income and debt. It is important as you consider purchasing a home to understand that what you feel you can truly afford. Various mortgage products assess your gross income. That's your income before any deductions, and current debt payments to determine your affordability. So as an example here, and let me state this is just an estimate, for a family of 4 that earns $50,000 a year with debt payments less than $400 a month, they may be told that they can afford a monthly mortgage payment as high as $1,300. That may fit for you, that may not fit for you. This may or may not be truly affordable. At the Homeownership Center, we recommend that you take a cash flow analysis approach to determine what you can truly afford. And we'll help you with that in your one-on-one appointment. Take a look at your net income, the real money that's deposited into your bank account every payday. Next, make a list of all your monthly expenses. This includes loan payments, credit card payments, student loan payments, as well as the cell phone bill, gas for the car, childcare, groceries, and entertainment. List out everything that you typically spend money on throughout the month. Don't forget those periodic, occasional expenses like getting your hair done, purchasing clothing, holidays and birthdays, and vacations. A good way to do this is by reviewing several months of bank and credit card statements. Take a careful look at what you're spending your money on, list out those expenses in various categories like clothing, food, entertainment. Next slide, please. You're going to total all the expenses and subtract that from your monthly net or take-home income. Do you have any money left over? That's a surplus. That's great. Make sure when you have a surplus that you've also incorporated some savings. You've heard pay yourself first. That's really critical. Maybe you've spent all your money and there's just not much money left. Or maybe you've spent more than what you brought in that month. That creates a deficit. You want to take a look at your potential to be able to save money each month. Do you put the money in savings only to take it back out later to pay bills? Next slide, please. So if savings is difficult for you, as it is for many of us, review your expenses. Are there some areas where spending is flexible? Try to set limits on spending each month so that you can begin to save. Rent, car payments, childcare, utilities may not offer much flexibility. Other areas like groceries, eating out, entertainment, clothing, or household goods may offer more flexibility. Next slide, please. So let's talk a little bit about groceries, entertainment, clothing, eating out, or household goods. These are a little more flexible. There may be areas here where you can reduce some spending. Can you shop at a grocery store where food costs less? There are upsale consignment stores and thrift stores that offer reduced clothing cost. Try a movie or game night at home rather than going out. Meal plan for the week to reduce the need to eat out or carry out food. This last year, we've all been home a lot more. We're eating out less, we haven't been to the movies, we haven't been to sporting events. So most of us who've been lucky enough to continue stable employment have had some extra money and been able to save more than maybe we ever had in a long, long time. So the world is opening back up and things are going on and there's places to go. Think about continuing to maintain some of those habits that you developed during this year of COVID, where you might cook at home a little bit more, plan some fun activities at home, and still continue with your ability to set aside savings. Next slide, please. Take a look at your current rent payment. Do you think your mortgage will be more or less than your rent? What additional expenses will come with being a homeowner? Will you have additional utilities? A lot of renters don't pay a water bill, so that may be something new that you have to be prepared for. As a homeowner, you have to be prepared for home repair, homeowner's insurance, and property taxes. Depending on where you purchase your new home, there may be added transportation cost. You want to be able to continue with monthly emergency savings as well as savings for home maintenance once you're a homeowner. So let's think about it like this. If you're currently paying $800 in rent, and once again, this is an example, it depends on where you purchase, what the property taxes are going to be, what type of loan you have. So we're just using these numbers as an example. Let's say you're paying $800 in rent, but you plan to purchase a $150,000 home, and that's going to cost you $1,200 a month in a mortgage payment. So you need to plan for an increase in expenses of at least $400 a month, and then think about the utility, transportation, and so on. Keep in mind that estimated mortgage payment that comes from your loan officer will include principal and interest on the loan, as well as your property taxes and your homeowner's insurance. Okay, so you want to think about what's really affordable for you. Make sure you don't take on more of a mortgage than what you can afford. So while all of this can seem overwhelming to even think about, remember that the Homeownership Center, working in neighborhoods, and the loan officers at Fifth Third Bank are here to help you through this and determine what you can feel you can truly afford. I know that your Fifth Third loan officer is going to ask you about rent and what you anticipate your mortgage payment is going to be and help you understand what that impact is going to be for you personally. We're here at the Homeownership Center to help you with this, as well as WIN, and like I said, the loan officers at Fifth Third, of course. Next slide, please. Okay, in addition to our home buyer program, I just want to talk briefly about other things that we do. If you're a current homeowner and you need help getting mortgage ready to refinance or maybe take out a home equity line, you've been to Fifth Third, they've said you're not quite ready, come back to us, come back to Win, we can help you get mortgage ready so you're better prepared when you go back to that Fifth Third loan officer. We also help homeowners who are struggling to pay their mortgages with our foreclosure prevention program. A lot of people are in a COVID forbearance right now and may not have to make a monthly mortgage payment. Those forbearances are going to end soon. And I know that Fifth Third's going to be there to reach out to you to help you get back on track with your mortgage. If you're struggling understanding what your options are or how this is going to work, or let's say you have to collect some documents and you really need some help with that, the Homeownership Center can help with that. We'd be happy to reach out to you. We also have a homebuyer education class online. We are now also offering Zoom classes, and we hope to have homebuyer education back in our office again whenever it's safe to do so. Specifically for folks that live in Montgomery County, we still have our mortgage assistance program. If you're behind with your mortgage due to a COVID hardship, give us a call. We may be able to offer some financial assistance to bring you up to date. Also, if you have a lot of debt payments and you're struggling and you had a reduction in income or even a job loss during COVID and you had to live off the credit cards for a while, if the credit card debt has piled up and you just don't know how to take this on and how to pay down, we have a debt management program through our consumer credit counseling program. So the last slide shows our contact information, and it's going to be available in this presentation. Any questions for me at this time?
Yeah, we did have a couple questions in the queue. First one, do you have to have your student loan paid off before you can purchase a new home?
Okay, that's a 30-minute presentation to explain about student loans. So it depends on your other debt, it depends on your income, it depends on how much your student loan debt is. Certain mortgage products are going to count 1% of your student loan balance in your debt ratio, regardless of your payment. Other programs are more flexible if you have an income-based payment. So I'm not trying to dodge that question. I'm saying that's definitely a one-on-one situation. But student loans are an issue that you need to address with your housing counselor or loan officer.
How about certain neighborhoods maybe that are promoted more for home ownership and repair, maybe grants that would be available, anything of that nature?
Okay, well, Hope is going to be your expert south of Dayton, and we're going to be the ones that you call for Dayton and the surrounding areas. What I can say is a lot of funding is still being diverted towards COVID programs. So in some situations, there's a little bit less available than what there used to be. You can also talk to the loan officers at Fifth Third about rehab products. FHA has a 203K loan, and some local lenders offer some additional money for repair. That can be a struggle with a first-time home buyer. So you want to talk to your housing counselor or your loan officer about whether purchasing a fixer-upper is right for you.
Awesome, thank you. And then Sandra also had a question, but I think Dan's going to get to it, so we can go on with the presentation.
I actually have a question. I'm John Reese, but I'm actually Walter White. Does Fifth Third offer down payment assistance? And do I find a house first or find out how much of a mortgage I can afford first?
So I'm going to answer that briefly, and then Dan's going to talk about that in just a minute. Yes, there is a program that Fifth Third offers. There's some local programs. Different lenders offer different things. It depends on your personal situation. Where are you purchasing? What is your income situation? So there is assistance out there. You're going to talk to your housing counselor and your loan officer because it's very specific to you.
Well, Jackie, thank you so much. If there are additional questions, keep them coming in Facebook Live and on our Zoom chat. We are definitely ready to dive deeper into many of those questions with our expert. He's a CRA loan specialist, and one of my favorite all-time people, superstar, Mr. Dan Beckley. Dan, take it away.
Hi, everybody. My name's Dan Beckley. I've been with Fifth Third for about 15 years, and I've been in lending for, I think it's like 23 years. So I've got a lot of stuff in my brain. I'd be more than happy to talk to people about specifics and one-on-one sometime, maybe next week, have one-on-one appointments and things like that. But as for now, we're going to get through this presentation. Can we pull that back up on screen, please? All right, so mortgage is a really complicated subject, but we're going to try to hit some of the basics today so you can get an understanding of what you're needing to do to prepare. So part of the question that was just asked was, should I prepare and find out what I can afford before I pick out a house? Absolutely. You don't want to fall in love with something that is not going to fit your budget. So one of the first things that you need to do is find out what you can qualify for, and then turn that into what can I afford. So when I meet with a client the first time, we really want to focus on what is affordable, just like we talked about. Qualifications are based on statistics, on whether you're likely to pay back or not. They're not based on specific individuals and their household situation. I mean, lots of things like childcare, hobbies, and other things aren't going to show up on your credit report. So you have to think about your lifestyle, and you have to think about what you can do to maintain your current lifestyle and become a home owner. So when we talk about debt ratios, some of our programs, they can go up above 45% with compensating factors. And sometimes that's okay if you have a non-borrowing partner or spouse or something like that. You know that you can afford more than you can qualify. We're only using one of you to qualify for that. But typically industry standard is that your housing should be around 28 to 30, and your back end, which would be your housing plus your car loan and your credit cards and all the other different things on your credit report, would be from 40 to 43%. That's usually what we're looking for. So what we'll do is we will take all of your income and calculate that to a monthly level, and then we'll calculate all of the debts that you have, including the new mortgage, to come up with that debt ratio. Okay, so the types, like I said, are going to be your car loans, anything that is on your credit report, credit cards, child support, alimony, that kind of stuff is all going to be included in your debt ratios. If you can flip to the next. So we need to think about costs. When you do purchase a home, there are a lot of times there are costs that are really involved. Now, there are programs that are out there to offset that cost. And there's many times that I have been able to help people purchase a home where they didn't bring any cash to the table. Maybe they just paid for their inspection and they just paid for their earnest money. And then the rest of it we were able to cover with loan programs and down payment assistance and things like that. But not everybody is able to qualify for all those things. So you should keep in mind that you're going to need to start your loan with tax escrows and money, so that when those bills come due, we'll have enough money to pay. You're going to have to pay for your homeowner's insurance 1 year in advance so that it's paid, and then we'll collect it out of your mortgage payment every month in that escrow that I mentioned, so that the next year we can pay it in full for you. There's going to be potentially loan processing fees and title fees, your application fee. Some lenders charge the appraisal fee up front, and then your earnest money, which is money that you're going to put down to bind the contract with the seller. If you can go ahead and flip to the next slide, please. So there's a lot of different loan programs, and by no means are they all captured on this slide. One thing that I do recommend, though, is that you look at fixed rate mortgages. You want to be able to predict your housing costs. And taxes and insurance are going to change and fluctuate, but you want to have at least as much of it as you can control to be fixed as possible, especially for first-time homeowners. With adjustable rate mortgages, the only time that I personally recommend that those are used is for when you're going to have the loan for a short period of time. So folks that are downsizing, so maybe you're about to retire and you don't need a 4-bedroom house anymore, and you're thinking about buying something much cheaper, and you've paid off your house, but you don't want to sell your house first because that would be cumbersome for you to move and not have the place still in your possession. So when you downsize and you move into that new home, you're only planning on having that mortgage for maybe a few months because you're going to pay it off with the proceeds of the sale of your previous house. So that might be a good time to use an adjustable rate mortgage because the rates are going to be cheaper and you won't see that they're going to fluctuate on you in the time period that you're going to actually live there. For doing investment properties that you're going to hold for short periods of time, those are some things that an adjustable rate mortgage may be safe for. Other than that, though, you want to make sure that you have a predictable monthly payment. So FHA loans is something that I mentioned earlier. Those are a government loan that's backed by the government. They have a lot of benefits as far as credit flexibility, low down payment, but they're not for everyone. There's so many different programs out there that are available to you. I know that a lot of lenders will seem to just anybody with needing a low down payment goes straight to FHA, but that's not necessarily always the case. We've got, our Fifth Third Community Mortgage, which has a 3% down payment, has no PMI. There's a $1,500 closing cost credit. There's reduced closing costs. We can add it with our down payment assistance program that I'm going to be able to talk about in a little bit. So don't just think that you need a low down payment. You're stuck with just one program because there's a lot of different things out there. We also do offer the veterans loan, and that's a loan that is 100% financing. It has no PMI, monthly PMI. You're able to combine it with down payment assistance and other things to try to cover closing costs or reduce it, but it's only available to veterans. So if you are a veteran, we'd be happy to help you look into those options as well. If you can go ahead and flip to the next screen for me, please. So this is kind of a generic slide, but it goes over some of the things that you need to do to prep for home ownership. So you can make sure that you pay your bills on time. That's going to be one of the biggest things that's looked at when you're looking at a credit. Usually you're going to struggle a little bit more getting a mortgage if you've had lates within the last year. So that's something that you want to make sure that you do to prepare, is keep your bills on time. Look at your credit reports, with an agency like our partners that are on the call, or with a loan officer. A lot of times when I do initial pre-qualification for someone, it's way ahead of time. They're not ready to buy. They're going to want to buy something maybe next year. But we'll do a pre-qualification now so that we can look at what can they afford, what credit items might be obstacles. Kind of like a checkup at the doctor, where you're not necessarily going because you're sick, but you're going just to find out what else is going on that you might not know about, and to prepare for things in the future. So that can be a very early process for the pre-qualification, to look at the credit reports, look at your income, look at your history, find out what obstacles you may have, and then be able to move forward. It can help you save for a down payment, so that you know how much you're going to need, or what programs you may qualify for, or what programs may have money as far as down payment assistance and things like that. So when you go to visit with your loan officer, you want to make sure that you have documents. So you're going to need tax returns if you're self-employed for 2 years. You're going to need W-2s for employed people. You're going to need bank statements covering the last 2 months. It says 6 to 12 months, but I don't think that we need that. Some grant programs do require that you give 6 months, but you want to have those types of records so that you can see what you're going to qualify for and what you're ready for. Also, it is really a good idea to take a full home buyer education course, which I know that both of our housing partners that are with us offer online, and then hopefully soon in person again. That really will give you a really versatile idea, really good idea of all the things involved in home ownership, not just the lending piece or the smaller things that we're going over today. If you can flip to the next slide, please. So the next steps here is like I said, to talk with your housing partner or talk with your lender so that you can get pre-qualified and start figuring out what exactly your homeownership journey looks like. It's my catchphrase is it's not a matter of if, it's a matter of when. So if you're not ready right this moment, don't be discouraged. You know, the experts that are on this call have helped people who are probably in way worse spot than you may think you are now achieve homeownership. I mean, I have worked with so many people over the years that thought they could never accomplish it, and it was a lot easier than they thought, just because they had the right professionals and the right partnership to get there. So don't be discouraged, you know, to have that first conversation just to get the ball rolling, because that's going to tell you what your path looks like. You can flip to the next slide. I think I just covered this, but hold on. So the next, I'm going to start talking about our down payment assistance program, because Fifth Third does have their own down payment assistance program. If you could flip to the next slide. So with Fifth Third Bank, we can give you up to $5,000 that can be used in different ways on different programs, but it's a forgivable grant from Fifth Third. There is no time that you have to keep the house. There is no, you can be a second-time home buyer, you can be a third-time home buyer. It doesn't really matter. You just have to fall in one of the states that's listed here on the screen, and it can be used for down payment and closing costs on most of our products, but on our government products, it can only be used for closing costs because of the guidelines of those programs. So you would still have to come up, like for FHA, for instance, you'd still have to come up with the 3.5%, or use it in combination with one of the other programs that's out there. So in Cincinnati, for instance, where I'm from, we have the American Dream Down Payment Assistance, American Dream Down Payment Initiative Assistance Program for the city of Cincinnati. So you can combine the $5,000 from Fifth Third with the program that they have to cover your down payment and your closing costs on an FHA loan. If it was a conventional loan, you can use both of those programs in combination, you know, along with a third if you have like welcome home funds, which are usually available in the early spring. You know, you can combine multiple different programs together to accomplish a down payment. I mean, I've done transactions where we had 5 different levels of assistance that were added onto the lending to be able to give people a sizable down payment on a house that they probably couldn't afford if we hadn't had that large down payment. So there's a lot of assistance out there, and that's something that you can speak with us, you know, one-on-one to see if you qualify for. If you can flip to the next screen. And talk a little bit about how you qualify for our down payment assistance program. It's based on the census tract that you're purchasing is located in. And so if you go to ffiec.gov, which is on this screen, I can help you with this too. If you have any questions about it, we can have a one-on-one conversation. But you can go to this website, click on the geocoding link that's highlighted on the bottom half of the screen, and then it'll take you to a map. And if you go to the next slide, you'll see that you can put in a certain address, like this, put in 2310 Ferguson Road, and it'll show, and this is a little bit outdated, it's using 2019 data, but you can see that this home on that red dot there is located in a low income census tract. And so that would qualify for a down payment assistance on the selected programs that we can use it with, no matter your income. So if your income qualifies for the loan program, then you could qualify for the down payment assistance program, whether you meet the income guidelines or not. So that's one opportunity to use it. So that would be targeted neighborhoods. And low income census tract does not mean bad neighborhood. I really I've heard people say that to me before, and it's definitely not true. I have helped someone buy a $200,000 house in a very nice neighborhood in Clifton, you know, in Cincinnati, you know, and they got the down payment assistance program because they were they were qualified based on the census tract. So don't let that discourage you. Just check any house that you're really interested in to see where it falls. As you can see, the census tracts are not very uniformly shaped. So you might be surprised where a house will land. Secondly, you can qualify based on your income. So in most areas, we're going to take that estimated MSA income right there that's highlighted, and we'll divide that in two. So we're able to do 49.9% of that amount is the income level for the applicant's income, which is really neat because a lot of the programs that are out there for down payment assistance use household income. So if you qualify based on the applicant's income, we can take advantage of this down payment assistance program. On this, on the current levels in most areas in the Cincinnati area, that's going to be, I do believe, like $40,049. I believe is more current accurate numbers. But we have to check because it's different based on each census tract and what those numbers look like. So we'll have to look it up. But in most areas down here, that's the income limits for that program. So that's all of my slides. So I'm ready to answer any questions that I can in the time we have left.
So John Razor or John Reese, do we have any questions in the chat for Dan?
We actually have some questions from Facebook Live. The first question, can you consolidate traditional outstanding loans for outstanding bills and roll the consolidated payments into the home loan?
That's a very good question. And the answer is yes and no. No, not on a purchase loan. When you're purchasing a home, there is no equity that's not being considered when you purchase it. So we're going to use the value of that home as the sales price or the appraised value, whichever is lower. So if you put down 3%, for instance, on one of our low down payment programs, there's no equity in that home to use as collateral to put in additional debt because the 3% is the required down payment. When you do own a home, though, over time, by paying it down, the neighborhood changing, your house appreciating over time, improvements that you've made to your house, and many other ways, your house can build in value. And once the house is built in value enough to where there's equity that you can borrow against, we can do what's called a cash out refinance and get cash out of the equity to pay off some additional debts or bills.
Second question is, do you recommend realtors?
I personally recommend realtors, but that's just my personal opinion. And Veronica is going to be able to talk to you about them a little bit more. But a real estate agent of any type is going to be really, really important. If you don't have someone representing you that's really knowledgeable about the market, that's knowledgeable about the area that you're looking at, knowledgeable about that specific house, then it's going to be a lot more difficult for you to come to the table prepared to negotiate well. They'll be able to do, comparative sales analysis for you to figure out what houses are going, for in that area. Because just because someone lists their house for a certain price doesn't necessarily mean that it's worth it. I could list my house for $1.7 million, and it's going to sit on that real estate market for the rest of my life because no one's going to pay that for my house. So just paying list or paying, a percentage of list, or there's no rule of thumb. You really need to have someone who's really aware of the real estate market to assist you.
Okay, Dan, from Zoom, a couple questions. When considering debt to income, what percentage are we looking for? And then also, would that be, when you're using the income, is that gross or net?
We're going to use your gross income to cover for the debt ratio. And usually, like I said, most programs are going to have a guideline of about 45%. However, compensating factors do allow for that to go a little bit higher. I've never seen things approved much over 50%, but it's really important that you look at your budget too, to make sure. Because like I said, in situations where you have a non-borrowing spouse or you have someone else in the household that's not going to be on the mortgage that's contributing, you could be very comfortable in going to 53% of your gross income, but in a situation where, you were like me and had $300 worth of childcare expenses a week when I was younger for my 3 kids, there's no way that I could have afforded what I could qualify for. So it's really important that you really speak to a loan originator and a housing counselor to figure out what's going to be in your budget and what's going to afford you the lifestyle that you want to have.
Awesome. Thanks, Dan. How about building versus purchasing? Do grants apply? How does that loan process differ?
There are 2 different types of construction loans that we offer at Fifth Third Bank. One of them would be an end construction loan, which is where you would use a home that's in more of a neighborhood usually. Like if a builder that bought a neighborhood and they were doing a whole neighborhood full of similar houses, and they're financing all the construction, and then they'll sell it to you at the end. So that would be a new construction end loan, and that would be where you're buying the land and the building from that builder all at once at the very end. Then we also offer what's called a construction perm loan, which is a little bit more complicated, and like was maybe mentioned, there's a lot of things on here that we could have another half an hour or 45-minute class on. But construction perm loans are typically used for when you have a lot or you're buying a lot separately, and then you're going to build on it using a custom builder or someone who's going to build that house custom for you, and it's paid out in draws, and there's a lot of different things. I can certainly cover a little bit more about that on the deep dive and also one-on-one if you contact me directly.
Exactly. That's
as far
exactly
as grants, though,
thinking.
I don't know a lot of grants that are available with construction stuff.
Okay, great. Another pitch for our one-on-one deep dive if you're interested tomorrow. So that is it on the questions.
We have one last question off of Facebook. The question was, Dan, that there are a lot of houses very few houses for sale, but a lot of bidders. And one of the situations this particular individual has heard about, and he was wondering, is this going on in Ohio, where they're like stripping away, like if I buy a house and I see 10 things need to be fixed, but if you want that house, sometimes the actual seller would say, no, I'm not going to do any of these things, but I'll let you be the bidder that gets the house. He used some terms that I didn't quite get, but he was basically saying that if I'm going up against 7 people and all 7 want the house, and then the homeowner can look at who will allow for not paying for construction fixtures like black topping, trees cutting down, etc. He said that that's going on in a lot of states, and people are literally taking big risks by buying houses, and some of them are also buying houses without appraisal. That's a part of the sellers saying to a particular client that if you want this house, no appraisal. Have you heard of that?
I have. There's a lot of things that are going on that are crazy in the market right now. I mean, that there is a very, very limited inventory of houses, and there is a lot of buyers because the rates, like I had said earlier in the call, are really low. They're in the upper 2s and the lower 3s for a lot of people. So, there is a lot of competition to buy a house right now. But I think it's very important that you do have some value estimation or valuation of the property to find out what you're paying for. There's 2 types of markets that we talk about. There's a buyer's market and a seller's market. Right now, it's definitely a seller's market, but the interest rates are really low. So if you think about a 30-year mortgage and what you're going to pay over the time that you're going to live there, if you pay a little bit more right now in the market, or you have to take on a little bit more repairs, or you do a 2 or 3K rehabilitation loan that we offer at Fifth Third, which I can help you with, and you end up paying a little bit more for the property right now, that may balance out because you've got a 2.875 rate. And when you're in a super seller's or a super buyer's market, maybe you might have a 5 or 6% interest rate, because there's not as many interested buyers when the rates are higher. So when you see that kind of market flux, there's pros and cons to buying in both types of market. But there is definitely a lot of sellers that are asking to waive the appraisal contingency, and they're wanting, if the appraisal comes in low, they're wanting the buyers to pay the extra anyway. There's a lot of things like that in the market, but having your real estate agent assist you with making those types of decisions on what's reasonable for you, and having your lender and your housing counselor there to back you up on the finance part, that's something that you want to really have those experts to make the decisions to see what's feasible for you.
Well, having not heard any more questions, do we have any more questions?
Yes, excuse me. I'm sorry. I'm on mute. I'm a audio. I'm sorry. I'm like on a on the audio end. I can't see the slides, and I wrote that, so I'm assuming nobody had received that message that I sent a while back. I just had a question in reference to the names of everybody that has given these seminars and slides and presentations, like Hope, Wilson, Tina. I can't see anything, so I wanted to know if I can get your information down and the guy that was just speaking, so I can contact you all after this is over with.
That sounds wonderful. Can you see the chat? You can't see anything?
No, ma'am, I can't see anything. I've been on here since 12, and I've all I can do is hear.
Okay. Well, one of the ways that we can get that information is through the chat. If you can just give me, why don't you give me your phone number, spell your name, your phone number, and I'll share it with our team, and they'll reach out to you, because a lot of the information, their information would be at the end, and you could just take a screenshot or take a picture of it. But what I can do is take your name and your, let me just take your name and phone number, and we'll have somebody reach out to you. Also, you can join us on the deep dive on Monday at 6. But
I wrote that down.
You can't see the link, so we'll work it out. Just give me your name. What's your name?
Sure, that is Natalie, Natalie.
All right, and
my
Natalie,
last name is.
I'm going to give you my email. How about that? Because I don't want your personal information out there like that. Okay.
Thank you.
My email. Yeah. I don't mind my email being out there. Its spelling is MARYA.RUTHFORDLONG. So that's Maria.Rutherfordlong@53.com. And you can send me an email, and I'll make sure that our loan officer and the housing counselor that's in your region will make sure that you get some reach out, and I'll probably send you the link for the deep dive. Okay. Thank you so much.
Okay, can I spell that back to you to make sure I have it correct?
Absolutely.
I have M as in Mary, ARYA.RUTHERFORDLONG at 53.com.
Exactly. That's perfect.
Thank you so much.
Thank you, dear. We are going to. Yes.
I'm sorry. I'm sorry. I unmuted mine because I've been having like questions, but I didn't know how to write them in or how to answer the questions.
Okay, Francis, what I want to do is have you ask those questions in a few moments. We're going to get through the final part of the presentation, and the rest of the time is for Q&A. Is that okay?
Okay, sounds good.
Thanks, Francis. Veronica, take it away.
She might still be on mute.
She might still be on mute.
On mute, Veronica.
Okay, here I am. Okay.
Wonderful.
Thank you. It's so nice that so many people are on the call and so interested. Great questions. Could I go to the next slide, please? I am Veronica Bedell Nevels, and I am the real estate broker with Priority Plus Realty. And we did have some people who asked some questions. Next slide, please. Okay. I've been in this business for about 18 years, and we are a full service real estate company. A trusted real estate advisor is who you need to help you go through the process of purchasing a home. There were some questions. I think Dan, someone asked Dan, who would he, do you need a realtor? And he said that he would refer you to a realtist. And I am the president of the Ohio Realtist Association. The difference is that I am a licensed realtor, but I am a member of the Realtist Association, which is an organization that has been around for 74 years. We're the local or the state organization for the National Association of Real Estate Brokers. We are a nonpartisan group of people who promote democracy in housing. And we have a long history. We were formed because of discrimination years ago. And now we are all part of our local boards, our National Association of Realtors, but we are identified as Realtist members. And we do promote democracy in housing. And can we go to the next slide, please? So when you start your process, you're going to work with a realtor. You really, really need a realtor in this market. You need a realtor all the time, and you'll see as we go through the process. Communication is the key. The methods of communication is very important. Things are, as Dan was saying, also that the market is kind of crazy right now, and things move quickly because we have limited inventory. A house can be on the market one day or in an hour, and 3 hours later, it's not on the market anymore. So your method of communication is really crucial. How am I going to communicate with my real estate professional? By telephone, email, text, Facebook, Messenger, Instagram, WhatsApp, whatever it is, you need to establish that rapport and that means of communication so that you can get through the process quickly, identify properties quickly, and get in to see those and write those offers so you can compete in this market. Next slide, please. So when you are talking or meeting with your real estate agent, the first thing you want to do is bring your wish list. The agent will give you a form called the Consumer Guide to Agency Relationship. It's required by the state of Ohio. And it simply just lets you know how we work as real estate professionals. You are approved through Fifth Third Bank, hopefully. And one of the things that Jackie Easter spoke about was what do you want your monthly payment to be? So even though you are approved, can we go back for me, please? Even though you are approved for, say, $100,000, you might say, well, I only want my payment to be $750 a month. So that payment, the real estate professional will get with your lender and determine what price range we really need to look in to make sure that we keep you in a price where your payment will be that where you're comfortable at, even though you are approved to pay more money per month, maybe $900 or maybe $1,000 a month. But we will, that's important for your representative, your agent to know what you're comfortable with as far as the payment is concerned. And then the area, the city of preference, where you want to live. Let that agent know that I want to be in this particular area because it's closer to my job or it's closer or it's the school district that I want my kids in. You know, let them know where you want to live. And then what are you looking for in a home? The features and benefits. I want a brick house with a 2-car garage. I want it attached. I want a basement. Let them know what it is your preference is in a home. Next slide, please. So when you are free to look at homes, that is something that's very important also, because again, with the market the way it is, as competitive as it is, you're looking on the MLS, the multiple listing service, you're looking on Zillow, Realtor.com. Your agent is looking for you also, and then you're riding by a home that interests you. You want to call your agent. You don't want to call the sign. You want to work with your agent the way that you agreed to communicate with. And then once you start looking at homes, you want to take notes. You want to prioritize each home also. Let's go to the next slide, please. So when you found a home and you think it's the one and you want to write the offer, inside the offer are lots of, I said, documents. I need you to go back for me, please. So inside the home are lots of documents. And one of the things that a lot of questions that have to be answered, and one is the amount of earnest money. And earnest money is your good faith money that you're going to put down to show the seller that you really have an interest in that home. That money goes into a non-interest bearing account and you get it back at closing. There's some, your agent will go into more detail with that, but you will get that money back at closing. The kind of loan you're getting, that's in the contract, the purchase contract. So if you're getting an FHA loan, if you're getting a conventional loan, a VA loan, it's there. You have to identify the kind of loan you're getting. That's why it's important that you're prepared and have your pre-approval letter, and your agent knows what kind of loan you're getting, so you'll know exactly what kind of house you're getting also. And the other thing too that's important when you're looking for a home, for instance, if you're getting an FHA or VA loan, those loans require that the house be at a certain standard. So you will not be looking at houses that need repair or are in disrepair if you're approved for an FHA or VA loan. So your lender as well as your agent will go over the kinds of houses that you can look at based on the type of loan that you're getting. The home inspection period, you will be able to do inspections on your property, the house that you want to buy, and you will have a certain amount of time to be able to do those inspections. And when you do those inspections, the seller will have a certain amount of time to remedy those, to make the repairs that need to be made that you have put down and requested. Then there's amenities that stay in the home. That goes on the contract also. If you want the washer and dryer, if you want to identify that the stove and refrigerator stays, you want those things put in writing so that when the seller gets the contract, they already know. And if the washer and dryer is not staying, they will mark that and say, no, that can't stay, but the refrigerator can and the stove can. The seller concessions, that's where you might ask the seller to help you with your closing costs. And there again, the real estate professional as well as your lender will be able to tell the agent what kind of seller concessions you need. Do I need $4,000 from the seller to help me with my closing costs, or do I need $3,000? Whatever it is, your agent will, your loan officer will be able to help your agent understand what your needs are. Then there's a home warranty, which everyone needs and we always ask for. The home warranty helps you with basic repairs. And a lot of times there's a $100 deductible with that home warranty, and it lasts for a year. So we ask the seller to provide that. So if you do your inspections, the hot water heater is great, there's no problems, you'll be able to call the home warranty company, and typically for $100, they'll be able to replace that hot water heater. You always want to have that. There's title insurance, which we can go into at another time. There's the closing date, when you're going to want to close, and it's typically about 30 days out. The occupancy date, you want possession right after you close on the closing date, or are you going to take possession maybe 5 days later? The seller response deadline, and then how you want your deed to be written. Next slide, please. So the documents accompanying the offer. So that was the offer. There's a lot of information in the offer. The documents that accompany the offer are the lead-based paint disclosure, and that's from the seller, the pre-approval letter, the residential property disclosure, that's from the seller, the agency disclosure, and the earnest money check or money order. Next, please. Now, the final process, you're meeting the lender standards, everything is going on simultaneously. You're doing your home inspections, the title work process is in place, that's going on. The appraisal has to be ordered, that's going on. And then the lender is asking you for documents throughout this process also. Next, please. So when you hear the word clear to close, that means that everything has been met. All the stipulations have been met. So the lender will schedule your closing. You'll meet at a round table. The buyer and seller typically meet at a round table. I just did a closing yesterday that was all virtual. The title agent or attorney will be the closer, and you'll be signing your lender documents, and you'll get your earnest money back, and then you'll get your keys, your garage door openers, and congratulations, you own a home. I went through that pretty quickly. So that's the end of it.
You did a fantastic job, by the way. I'm giving you all a hand. This has been an amazing time, and we have actually run out of time. Folks, I know you want the deep dive information, and we're having a bit of a challenge getting it back in because we have a lot of questions that are in the chat. Walter, how much time can we take 5 minutes to take questions? And then
yeah, I think we can take 10, 15 if that's necessary.
Okay. Perfect. I want to give time. And John Razor, I'm not sure if you can get I see you put a message in there. You said that you would ask them to email you, and he will email you directly the deep dive information. I suspect that you will have a lot of questions. Let us know what kind of questions you have, because it may not just be for our mortgage lenders. It may be for Veronica or the housing counselors, and we want to let them know that you might have questions for them, and maybe they can join us on the deep dive as well. So I just want to say congratulations. I'm gonna celebrate with you in advance on your new home by faith, if you will. And I want to take the time to answer questions right now. So John Razor and John Reese or Walter, tell us the questions.
Before we do that, if you don't mind, Maria,
Yes.
Did you get the information for the link for the deep dive?
Yes, but I'm not able to put it in there. For some reason, I'm not able to capture, because you send it to my cell phone. And so
John Razor,
And I sent John Razor.
Yes,
and it's
sir.
on his cell phone.
If I send that to you on your text, could you chat on your phone? Could you type it into the chat for us, please?
I think so. Yes, sir.
Okay. Maria, can you text me John's phone number and I'll take care of that? Thank
I
you.
should do it now. Thank you so much.
Thank you. Okay. We have a few questions. The first one kind of came across, and I want Veronica, because she's so good at this, to explain why, if I have chosen a realtor, but I'm not happy with them, do I have to stay with them? Or what do I do?
You do, if you did not sign a buyer representation agreement with that realtor, you can change. And even if you did sign that, you need to let that person know that you're not happy with the relationship and that you choose to do something different. And that's what you do. Because it is like almost like a marriage until you conclude your transaction. You're talking to each other every day, all day, day and night. You're communicating by text, by phone, all the time. And you have to have a good relationship, a good rapport with that person. So, you know, that's what you do. You need to be happy.
Any other questions?
I wanted Veronica to explain about who pays the realtor, because a lot of buyers don't want to hire a realtor because they're afraid it's an extra cost, and it's usually not a cost to the buyer.
You are exactly right. It is not a cost to the buyer. This is one of those professions where we don't get paid until we sell you something. And so the seller is the person who pays the realtor fee. So the buyer is not obligated to pay any realtor fees. The seller, that is the seller's job to do.
Other questions? John Razor, I saw a few in the chat. Do we have any from the chat? And also, Francis, when we get finished with that question, I know you have some too.
I do, but I really I would like to know how to type them in so that I can answer them. But since I'm not really good with Zoom. But one of my main, the one is my burning question is, if you're on a retirement or fixed income, is that going to be hard to buy a house?
To our mortgage.
I can take this one. Absolutely not. Income is income. So we'll base your qualification on what your income is. It doesn't necessarily mean that it has to be from employment. It can be from employment. It can be from self-employment. It can be from government assistance. It can be from Social Security. There's a lot of different, acceptable types of income. As long as we can properly document it and it fits the guides, we can use it. Also, non-taxed income, retirement income can sometimes be used at a higher amount, because it's not taxed, so we can gross it up. And depending on the program, sometimes that's 10 to 25% higher than the actual dollar amount to come up with those gross figures, because it's understood that you're not going to pay any tax on that.
Oh, that's fantastic. Where are you located? Because I am determined to buy me a house this year. I'm in Cincinnati.
Okay, well, we're going to have my contact information sent out, so feel free to call me and we can speak one-on-one for sure about your situation.
Okay, great. Thank you
but even
so
those
much.
Dayton folks, I'm more than happy to help people in Dayton as well, remotely if they need help. We've got the technology now to where we can do most everything with electronic signatures and online and by email, phone, WebEx. So we have options for anybody.
Oh, this is great. Thank you. Thank you.
Thank
Hey,
you for your question.
Maria, this Walter.
Yes, sir.
I just want you to know the link for the deep dive is in the chat now.
That's what I saw, and I was just going to announce it. Everybody, look under, it says Owning It, Cincinnati and Dayton Deep Dive Q&A. So make a copy of it, take a picture of it with your phones, or do a screenshot.
How can you see it?
Can you see it?
No, I can't see it. I'm the one that cannot see nothing.
Oh, that's right. You're going to send me an email, and then I'm going to send it back to you.
It's not even allowing me to send an email to you, but that's fine. I'll just try to do it after we get off the phone.
Yeah, do it after. Yes, do it after. Yes, I understand that. I'll make sure I'll be looking for it as soon as we get off of this, and I'll send you the link, okay?
Okay,
I have a
thank
question.
Yes.
Yes, my question is say for instance, you already have a builder for a home and you need to look into getting a realtor, who's supposed to pay for the realtor then? Or, you know, how do that go?
Okay, so you're saying you already have a builder?
Yes, ma'am.
So do you already have your lot?
That's another thing that I'm have to look into, is trying to find a lot. And once I find a lot, then, you know, or I'm trying to get the realtor, I'm be looking at the lot and trying to get a realtor at the same time to see how can I go by, you know what I'm saying, getting one thing or another, you know. So and I just want to know how you go by trying to get a realtor, or if you wind up getting a lot and go from there.
Well, you need your realtor to help you purchase your lot.
Okay.
Okay, and then the owner of the lot, again, typically pays the realtor fee for the lot.
Okay.
And then your builder, then that is going to be between you and your builder, what the cost of building is going to be, and your lender, and how they're going to structure your loan for construction, your construction loan.
Okay.
So my number's in the chat, and we can talk about that, do a deeper dive into that, because we are developers and builders, but I'm just want to talk to you about the process. That's all.
Okay.
Okay.
Okay. Like I said, I was curious because, like I said, this is like, you know, a totally different atmosphere for me. And I just wanted to make sure that I put a glove on every base, so to speak. So I won't miss nothing.
Yeah, and when you're trying to build outside, when you're using a private builder and you're doing it outside of a major construction project, it's a little trickier. So.
And that's why you need your real estate professional and your mortgage professional. They will work together to make sure that you have the best deal for your situation. And so you're very wise to be on this call, want to ask those questions, get in front of it. It's very wise, and I commend you for doing this work. Keep up the great work.
Maria, if I may say two things, please.
Yes,
we're going to send the link to all the people who registered for the deep dive within the next 24 hours. Okay.
Okay.
And then the second thing, in about 5 days, we'll put this on that deep dive note with the link. We'll have this up on Herald TV, the actual programming that we've done here today.
Wonderful, wonderful. So that folks can go back in and listen to the answers. That'll be, and the questions and the content. That's fantastic, Walter.
You're
Thanks
welcome.
to
Thank you.
Cincinnati Herald for that great partnership in providing information to the public. And I heard you out there, Jan. So thanks for joining us today as well. Yes.
Absolutely. Thank you, Maria. This is great information. Thank you.
Thank you. Question? I just heard someone.
There was a chat about entrepreneurs that I'd like to address, if that's okay.
Okay, yes, go ahead.
So the question was, is what information do you need as an entrepreneur to purchase a house? I hear it's harder as entrepreneurs. So most entrepreneur would be self-employed, and it's not necessarily harder to get a house when you're self-employed, but many times what happens is people don't have all the documentation that they need, and that could be an obstacle. So when you're self-employed, you're going to need 2 years tax returns that show the income of your business, and it's going to be the net income after your expenses that's used. So many self-employed people have their taxes filed by their CPA, and your CPA's goal is to save you as much money as possible on your tax obligation. They're not going to be thinking about lending, but we're going to be using the income after expenses in order to qualify you. And so that could be an issue if you write off a lot of things and you don't have a lot of income showing after the expenses are removed. So I can talk about that one-on-one a lot more detail, another 45-minute class on underwriting self-employed borrowers, but that's not what we're here to be able to do today. But I can talk to you a little bit more one-on-one on that, and I'd be happy to help.
One of the things that we do want to tell you that you can have a little more time to ask Dan and other professionals those kinds of questions is for the deep dive. And I think that we have a lot of folks interested, so we'll look forward to you joining us. And I will make sure that I send you the information that you will need. It's in the chat, but for the young lady who couldn't get on the video portion, I'll send it as soon as I get your email. John Reese, any other questions?
I mean, you can't take it from a video chat anyway.
Please mute your phones. If you are not speaking, please mute your phones. Thank you.
We don't have any more over on our side, Facebook Live.
Okay.
We had one quick question on in regard to the earnest money. Does that amount vary based on loan or cost of the house, or what's a good rule of thumb for earnest money that you're going to put in?
Veronica? I think you might be muted.
I am. Okay. Now, say that again real quick for me.
Basically, with the earnest money or, deposit that you're going to put in, what's a good rule of thumb for maybe the amount, if there is one?
It depends. There's no set amount. It depends on the value of the property. Typically $100 for a house up to maybe $100,000, but higher than that, it could be 500. It could be 250. And then a lot of times it could be 1,000. Now, in this competitive environment, I just had a seller demand that a lady put up $3,000 to buy her house, but it was a $500,000 house. But so it depends on the amount, the cost of the house, as to how much earnest money people put up. And sellers can, the real estate professional can put in the purchase contract that we're going to put up $500 for earnest money. And the seller can turn around and come back and say, well, I want 1,000. And then, you would have to contend with that. And so it happens sometimes, but not often, that the seller will come back and demand more. But it can happen.
Awesome. Thank you very much, Veronica. That's it on the questions, Maria.
Thanks, John. Thanks, Jay. I'm John Reese and Walter. Now let's think about the winners. That you all have been active, but we have selected some information. We have selected 2 winners, one from the Zoom call and 1 from Facebook Live. And the first winner on the Zoom call has been Ebony Wynn. Ebony Wynn, you are now the winner of a $50 gift card. What we will do is have your information. I know that you registered, and so we'll get your information from that registration, and we'll make sure we get that $50 gift card mailed out to you.
Thank you.
You're welcome. Yay. So the second one is from our Facebook Live audience. And that audience, we picked William Kirkland. Everybody hand clap for William Kirkland. Woo, woo, woo. So we have our 2 winners, Ebony Wynn and William Kirkland. Now, if we could move to the next slide. I want all of our contact information to be shown so that people take a picture of this with your phone or screenshot it on your laptop. This is really, really how you want to contact us. So Dan is a mortgage officer. Tina is a mortgage officer. Jackie and Hope are both specialists in home buyer education. Homeownership centers in Dayton and the region north. Down south in Cincinnati is Hope. They are very, very, they are experts in this, and they've been doing it for a long time, and they can really help guide you along this home ownership journey. Additionally, Veronica is the president of the Ohio Realtors Association and has access and lists of realtors all over the state of Ohio and really all over the country. She is a seasoned professional, and I just texted her and told her, I'm gonna need to talk to you too. Because we are thinking about downsizing, and I think I should have that conversation. And Dan mentioned that a lot of folks are thinking about downsizing. And then you have my manager, Royce Sutton, who is the Ohio manager. And then you have myself, who's managing the Dayton and Cincinnati region. So I am so grateful to everybody who's looking to pursue this American dream. I know there was nothing like that feeling when I opened the door and it was mine, and I didn't have to worry about the rent going up or things like that. It was a fixed rate, and I was happy, and I've been in my home for 20 years. And it was all because some folks like these professionals came alongside me and helped me. Now, let's not forget the deep dive. If you had questions are you ready to move forward? I definitely recommend the deep dive. It's in the chat. Go to the chat, take a picture of that, and we will be there to meet with you on Monday. And if there are questions that we can't answer, we are going to make sure that the professionals who can answer it get your answer. We know that we couldn't get it all in this short period of time, but we're glad you joined us. And we are looking forward to you joining us again on the deep dive if you have any more questions. And I see people congratulating Ebony and William in the chat. So congratulations to our winners. Thank you so much to our really, really wonderful experts who have shared such great information. And look for us, if you missed this one, it'll be on the Herald website. Did you put that in there, John? Did you put the information in for the Herald's website so that if they want to review this again, that they can?
Yes, I will put that in the chat right now. And don't forget, it will be on the Herald TV on YouTube, and it will also be on our Facebook page also, if you want to access this information again. So go ahead and put it.
Wonderful, wonderful. Great job, everybody. Listen, have an amazing Saturday afternoon, the rest of your weekend. Fifth Third Bank is grateful for your partnership, and we look forward to you walking into your new home. Owning It is a brand from the Herald, and we're grateful to partner with them, and we look forward to our next time together. Have a great day. Bye-bye, everyone.
Thank you.
Thank you.
Thank you.